Broadcom stock is sitting around $330 a share, and Wall Street says it's got a long way to go, upwards. That means they're almost a $1.6 trillion company today, up 45% this year and 119% in the last 12 months. So here's the question. Can Broadcom keep this insane run going, or are investors about to get burned? Well, here's what makes me pause. Broadcom isn't just a chip company anymore. It's becoming the backbone of digital infrastructure with huge acquisitions like VMware. And then, just last week, OpenAI signed a $10 billion deal with Broadcom to build custom AI chips. That's not just a contract. That's a signal that the NVIDIAs of the world may not be the only kings of AI hardware. So, is Broadcom the next trillion-dollar winner for retail investors, or a $1.6 trillion bubble waiting to pop? I'm going to break down the numbers, the risks, and the hidden signals that most are ignoring. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. And that's a good thing because it means I'm not going to be here to sell you hope. I do the math, so retail investors like you can make smarter, more confident decisions. All right, let's get into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Broadcom is a global technology company that operates through 2 primary segments: semiconductor solutions and infrastructure software. Its products are deeply embedded in critical end markets, including data centers, networking, broadband, wireless, storage, and industrial applications. But here's the thing. Most investors still think of Broadcom as just a chip company. But the truth is, it's only half the story. These days, Broadcom is so much more. They're becoming the backbone of digital infrastructure. The company has achieved scale and diversification through major acquisitions like CA Technologies, Symantec Enterprise Security, and most recently, VMware. In other words, this isn't some niche semiconductor play anymore. Broadcom is evolving into a one-stop shop for the future of enterprise tech. Overall, Broadcom's scale, diversified portfolio, and integration of hardware and software provide durable competitive advantages, and that makes it one of the most strategically positioned companies in both the semiconductor and enterprise software markets. So the real question is, does Broadcom's stock performance match the story? Because if the fundamentals don't support the hype, that $1 trillion or $1.5 trillion valuation could turn into a $1 trillion problem. So let's see how the stock is performing. By the way, if you want to follow along, just scan this QR code. Right now, Broadcom trades around $330 with a near $1.6 trillion market cap. The stock has a 60-month beta of 1.16, which means it's about 16% more volatile than the S&P 500. So that adds a little bit of risk, but it also adds a little upside if you get it right. Performance-wise, this is where we start to see some eye-opening numbers. Broadcom is up almost 45% year-to-date and a staggering 119% over the last 52 weeks. It even just hit a brand new all-time high of $356.34. So the market clearly believes in Broadcom. But is this optimism justified, or are we just chasing a rocket that's already out of fuel? Well, to look at that, we have to look at the financials because this is where the story starts to get interesting. The numbers look great until they don't, right? Broadcom just reported almost $16 billion in revenue for Q3, up 22% year over year. They also announced a quarterly dividend of 59 cents a share, which I love. On top of that, they delivered record third-quarter revenue thanks to surging demand in custom AI accelerators, networking, and, of course, VMware. Net income came in at $4.14 billion, and that is a huge turnaround. from the loss of $1.87 billion in the same quarter last year. But there's a kicker. Despite all those wins, Broadcom's net income actually fell 16.6% quarter over quarter. That could be a little bit of a red flag. And if you zoom out to 2024, the picture gets even more complicated. Profitability took a 58% nosedive from $14.1 billion in 2023 to just $5.9 billion. Sales, though, grew 44% that year, but profits, they didn't follow you. And that tells me something simple but critical, right? Growth without profits is just a liability in disguise. So beyond the numbers, I have to ask, what's really going to drive Broadcom's next chapter? Because if they can't turn growth into profits, that $1.6 trillion valuation gets tricky. And this is where things start to get really interesting, because there was one deal that just landed on Broadcom's lap, and it could change everything. OpenAI just signed a $10 billion deal with Broadcom. Right now, OpenAI runs almost everything on NVIDIA GPUs. They're insanely powerful, but they're also insanely expensive and really hard to get. So what is OpenAI doing? Well, they're going to build their own. And who are they going to partner with to do it? Broadcom. OpenAI wants custom chips designed specifically for AI training and inference. And this isn't some side hustle now, right? OpenAI could be buying millions of these chips by 2026. So the bottom line is, if Broadcom can deliver, they're no longer just a supplier anymore. They are rewriting the rules of the AI arms race. So my question is this the inflection point where Broadcom goes from a great company to an unstoppable AI juggernaut? Let me know in the comments below. And if you find this video helpful, don't forget to like and subscribe. Okay, so now let's talk about the risks, because for every great rocket ship, there's gravity trying to pull it back down. And the reality is, Broadcom is heavily reliant on just a handful of clients. In fact, in their second quarter filing, Broadcom admitted that their top 5 customers made up about 40% of their total revenue in both 2024 and so far in 2025. Even more shocking, one distributor accounted for nearly 30% of revenue in each of those quarters. That means if just one of these giants cuts their orders, switches suppliers, or squeezes Broadcom on pricing, the bottom line could hit very hard. And when a business is this concentrated, it's not just growth that you're betting on, it's loyalty, and loyalty can vanish overnight. So where does this leave us shareholders? Well, right now, a consensus among 37 analysts rate Broadcom a strong buy with an average price target of $400. And I think that's very conservative, but still, that's nearly 20% up from today's level. And the consensus rating has been climbing and climbing for months straight. And honestly, I agree. Broadcom just delivered record earnings. It's riding a huge wave in AI, and its VMware acquisition could be a long-term catalyst. Of course, OpenAI as well. However, they are relying on a few customers, so that could be a risk as well. So what do I think? I think for the stock, I think for Broadcom, I'm cautiously bullish. I see the upside, I see the risks, and I'm watching this OpenAI deal like a hawk. But what about you? Are you betting on Broadcom to be the next giant in AI infrastructure? Or do you think the market's already priced to perfection? Let me know in the comments below. And while you're there, of course, if you found this video helpful, please like and subscribe so others will find it as well. Well, folks, that's it for me today. I wanted to thank you so much for watching, and I'll see you in the next video.